Welcome back to Primary Source China Investment. Peng.guo and I are here today for show I-5. And it got us thinking, maybe China's just going to have a recession. There's no shortage of reasons to be bearish about China, and we've covered them a lot. We've highlighted the long and short-term challenges of the economy. Debt at all sorts of levels is high, the plummeting birth rates, stagnant property sector. But it's naive to think that Beijing will let it all wilt away and give back all the gains it's had in the past 40 years or so. If there's one thing the party does well, it's get things moving in its preferred direction. So China is still the largest trading partner on the planet. It took 25 years to get here, and unwinding that doesn't just happen overnight. There's plenty of momentum built around manufacturing products that the world wants and moving them around the world. China's also a mining juggernaut. It's the largest gold miner in the world and the third largest copper producer. It's also the global leader in EVs, solar tech, and according to a year-long study, leading 37 of 44 key technologies, including hypersonics, radio frequencies, 5G and 6G. China ranks first in terms of share of global output in 16 of 22 manufacturing categories tracked by the UN. And they are second in the other 6. So, Peng.guo, I pose this question. Is that all in the past? Is China in a doom spiral?
I would like to see, I agree with you. China is the second largest economy. So it doesn't, right now, it's really affected by the global recession. And so a lot of things get impacted. And I see bad news, they always come together. So that's always happens in the security market. So as long as at the bottom, all the bad things pops up. So people really try to understand when it could be like the turning point for this kind of the recession.
Yeah, you use the word recession. I want to key in on that. So there's no formal definition of a recession, and some people look at the stock market and, oh, if you're 15 or 20% off the recent high, that's considered a recession. And there's some economists that will simply say, look, if you have 2 quarters of negative GDP growth, that's considered a recession. I looked and checked, and I went back to 1992, the oldest data I could find, and China's never had 2 quarters of negative GDP growth since 1992. But if it does, it would just be a normal recession and all of the attendant issues that come along with that. So if China just has a recession, maybe a quarter, maybe 2 quarters, maybe 3 quarters, and then works its way out of that recession, and there will be a lot of pain. I mean, not underestimating the real estate sector and the losses, the paper losses people are going to take on a lot of their real estate. But China might just have a recession. Is that possible?
I think China has its own business cycle, which is, I know, definitely different from the United States business cycle. And also that's, I don't know how to define the China recession, but it definitely happens. So every year you see the government annual report, you will always see that's so many difficulties. It's almost a challenging year in the history. It always happens like every year. But I think this time is really like the 30 years accumulate problems. So that's a lot of things, structure related things they cannot resolve it. And so right now, we are really in the global recession. So the export keep declined, and due to the industry countries, the consumption needs as a KP declining for, I think, maybe for 1 or 2 years. So that's significant impact of China, and also with the real estate, a big problem. So I think is really in the bad situations right now. So it's really test the government how to manage in the economy. So it could survive it and make the structural change. Otherwise, it will continue getting down.
Yeah, you mentioned what the government is and is not doing. I know Li Chang vaguely said something about boosting domestic demand and consumption without really articulating anything. Beijing recently cut rates. a little bit, maybe 15 bips or something like
That's
that.
more like the bandy. So
Yeah, that's exactly right. That's my point. The reality is that savings have gone asymptotic basically doubling in 2 years, and the consumer is in no hurry to bail out Beijing. So consumers not spending and they're saving more. This is sort of the continuous loop that's happening. So yeah, I agree. It's more like a band-aid than a real solution here.
Yeah, I think that's more like the structure change right now, and also affect the many people from the upper class or from the bottom people. They all get affected. I think right now it really depends how they make the change and how this is restructured and become more sustainable or growth. So the bad mood is quickly spread everywhere, but probably they also have some opportunities in such a in such hard situation.
There does seem to be two things going on simultaneously. One, if you look at some of the trust products, this week it was Zhongrong Xintuo that had the bad news on some maybe defaults. But that's what really needs to happen, because this implied guarantee is what kept people investing in these, what I will call risky products for, high single-digit returns. So if there's a move to allow those products to go bankrupt or allow those investors to lose money, that's a good thing. On the bad side, a lot of these LGFVs, the local government financing vehicles, have now turned into the regional or the provincial level. So you have locations that, instead of being at the local level, they've rolled up to the provincial level, like in Tianjin. So a lot of the local government bonds were issued, people didn't want them, and then the local government said, well, Tianjin's going to cover us. And then all of a sudden it's hugely oversubscribed. So that to me is bad behavior. The first behavior is, sometimes common prosperity means common pain also, and you need to have some of that pain. The investors can't always expect the government to bail them out.
Yeah, that's also like I said, like we said so many times. You have to understand your underlying assets. What do you invest in that? So a lot of people, based on the selling skills, they put based on the reputation, they just do the investment. That is probably, I think that is the most important factors make people to do the investment decision. And number one, if you know that person or trust it. Number two is if any reputation. Or that's two major factors. So they don't understand, don't deeply understand the investment at all. So they make a huge decision, and right now they lose the money. So they stuck in a really hard situations. I know even some of like the financial industry, there's many people still losing money from the trust companies outbreak, the big problem.
Absolutely. Well, we're going to leave it there for show I5. Thanks for tuning in. Enjoy the rest of the summer, and we'll see you next week.
Thank you.